Hey everyone, and welcome to today's DeFi Drop, which features Superform, who's returning to the show. And today's drop actually features Vikram Arun, Superform's co-founder and CEO. So welcome, Vikram. Great to have you.
Yeah, good to be here. Thanks, Ed.
Nice. Yeah, it was Christian Duma actually who joined us in January. And since then, you've hit some pretty cool milestones and some big targets. You've shipped the Superform OS. You've rolled out your mobile app across the EU. Your up token is listed on Upbit, Bithumb, BitGet, and others, and launched externally curated SuperVaults on Flare, which actually is a network that Portals has recently added to our platform. So, yeah, we've got a lot to chat about, and let's get stuck in then. Your Q2 update, that's actually what I was getting stuck into yesterday. And it leads with the Superform OS, right? Your permissionless vault curation, configurable strategy logic, and Oracle-based nav updates. What does making vault curation permissionless change about who actually builds on Superform, and where do you still gatekeep?
Yeah. So starting from the ground up, we constructed Superform OS and by extension SuperVaults to actually support permissionless scale of vault creation. We felt that there are a lot of vault frameworks that had been gating vaults behind, expensive B2B type of contracts. But what we had built in smart contracts and what vaults initially were back in 2020, 2021 were entirely permissionless instruments to just get capital and invest it, with everything being on chain. So there are a couple different technical layers that went behind making vaults permissionless. The first thing, the easiest thing, was actually just making the contracts on chain callable by anybody. That was the easiest part. But then we had to deal with the whole idea of curation and what we actually show on our front end, which I imagine is something similar to what you guys at Portals are also dealing with. Is just by extension, us putting a vault on our front end makes it seem like, Superform is approving of something, and at generally permissionless scale, that's an issue. So we actually have a whole mechanism called upkeep in our vaults, where effectively, if you stake up tokens, you have economic value that will then get you on the front end, but then that upkeep can also be slashed. And then we use that as really a measure of how much, backing there is behind a curator who's launching something. And then beyond just actually creating the vault, there's a bunch of stuff that needs to be done on the operations of a vault. So imagine, you're writing your rule set for a vault. You're saying, I'm going to be I'm going to be lending to this Morpho market. I'll be depositing into this Euler vault. All of those automations are things that we provide out of the box for people, and say I'm running that every 60 seconds. That cost of paying those automations is also done and activated by staking tokens. And all of that, is something that, we calculate the price of, and then you're using your smart accounts and everything as paymasters to pay for this. And that's the degree to which, if someone were just to use our contracts to launch a vault, they're not going to get either the distribution through our front end or the mobile app, or the automations being run. But assuming that all of those things are paid for, which is also an entirely permissionless process, to get on the mobile app, there is, some more things we've been doing around curator security. But for the most part, the entire process has been built ground up with the up token as being a generally permissionless mechanism to create vaults. I'd say so far, we've just launched this, I guess 2 months ago, and we've been focused mostly on those opportunities that you mentioned, on Flare for 14% stablecoin yields and 3% XRP yields. So we haven't seen and haven't really pushed genuinely permissionless vault creation yet, but there has been a lot of demand that we're just trying to figure out the right time to actually go and distribute on our services. But the amount of crazy vault ideas that I've been pitched over the last couple months, we have to do another podcast on that.
I'm sure the opportunities are flying in left, right, and center. So yeah, we will book in another podcast. But what you're describing is essentially a proof of stake security model. applied to curation quality rather than block production, correct? Like
Yeah,
the
great way
slash
to put it.
move on. The slash move on isn't just discouraging bad actors; it's making curators' reputation economically like legible on chain. And you mentioned Flare. I'll get to that just now. Actually, I'll get to Flare just now. But your Superform OS promises bounded execution. Operators act only with disclosed Merkle-verified rules, with validators attesting to price per share. This year has seen institutional type curators disappear. Not too many, but that was actually a quote from Noah from Byzantine, which we discussed. But to some degree, yes. And which curator failure modes does the architecture actually remove then, and which ones still sit with the operator?
Yeah. I think there's never been a more important time to be a good curator. Like that, we're not replacing curation at all. What Superform OS is doing is it's making it easier for curators to do their job. Um, it's allowing for rules to be set, have them be public, for the curators to run automations, for them to be rebalancing, for them to set like that brain is still the most important thing they have, and then they use Superform OS as the body and the hands to actually execute a lot of what they need to do. I'd say, yeah, I mean, it's been unfortunate to see some of the mishaps over the last, call it 6 months, and in vaults and curation generally. I think a lot of that is solved by people starting to make the whole strategy behind a vault public again. 4 years ago, 5 years ago, we had all of this stuff on chain, and it made it very expensive. And frankly, like, with AI and everything, a lot of what that was is now actually less safe than what it is now. And not everything can be smart contract code. But we went very far one direction, which was just that, hey, curators, like, you have these roles in vaults and you can just perform actions that, sure, they're bounded, they'll be in Merkle trees, will have rules around your execution that keep you in a playground. But a lot of the logic behind how money was actually being moved is not being defined right now. And that's what Superform OS is doing. And I think it does limit some failure modes where, for example, Gauntlet, right, in the RSETH incident, was automatically like reallocating to some markets as they were deallocating. Um, and a lot of those automations and things that are being set by curators, like those are, Superform OS should protect you against a lot of instances where there's improper execution on what should be a defined rule by a third party. That being said, it's a hard industry, and I think when you're looking at institutional curators that have bowed out, um, I think we're going to see very much two different sides of curation. One is you know, more and more institutional. It's going to be more focused on your Robinhood kind of expansion into new distribution networks, way more institutional. Probably people like Bitwise and Apollo, coming in, and it's just them curating and them offering their own opportunities and going to that distribution. And the other side is going to be like your DeFi-native distribution, which is going to be looking for more long tail opportunities, but evaluating risk properly in those. And that's kind of how I view our opportunity on Flare, is a relatively simple, but definitely harder to find and harder to access opportunity that your institutional curators would probably not be getting into. And that's why we thought it was a great, first launch for this. But yeah, curator landscape is definitely changing. But our goal with Superform OS is just to make their job easier.
The gauntlet example that you just cited now is it's a real instructive one. What you described there is precisely the case for having rules, all right, encoded into these stress events. But on Flare, yes, it is an exciting space, right? You host two Byzantine Labs SuperVaults, correct?
Yeah, it's USDT0 and then fXRP.
So 13.5% through Mystic Core Lending, and then the
Yep.
Biz FXRP.
It's around 3%. No.
Okay, fantastic. And Noah also told us that this shows that a large share of flare yield actually comes from incentives.
Mhm.
What is your bar for these vaults once emissions normalize? Like, what has early flare deposit data shown you already?
Yeah. I think Flare's in a very unique position because there's just an insane amount of XRP that's not on chain at all. And I think like I don't actually remember the numbers off the top of my head, but say there's like somewhere around I think like 100 million in fXRP that's earning yield on their chain right now. Just imagine like I think there's like XRP is a $50 billion asset, um, and you know, uh, if they're successful in actually getting a lot more of that XRP onto Flare, then that means that the rates that we see right now for stablecoins and everything else is actually quite low. And over time, it's that the incentives that they're currently providing on those vaults are made up with real borrow demand for stablecoins and for fXRP. So I think we'll be working with them quite closely on like how we actually can bring on more XRP into DeFi, which is actually also a strategic initiative of XRP, but you know mixed between XRP Ledger and a lot of other XRP derivatives. Um, but the yeah, I mean the opportunity is pretty clear, and it makes sense why Flare is currently spending incentives right now to bootstrap those opportunities. A little bit more on the two vaults themselves. So currently, yeah, the USDT Zero Vault is allocating into Mystic lending vaults, which is based off of Morpho. Um, Now over time, those incentives fade, but then we get more fXRP onto Mystic, and then borrow rates, lending rates for USDT Zero increase. On the fXRP side, currently the strategy is also mostly involved in Mystic, but it will be expanding. We're adding support for Superform OS to access async and cross-chain opportunities. So that'll allow us to do more things with all that fXRP that's in the vault. And then we're also adding support for LPing. So they have like Firelight's large protocol on Flare, and will support the LPing between that asset and fXRP. So yeah, it's a little bit more complicated for us to do some of these yield support things because going back to our first point about supporting permissionless scale yield, we actually have a whole validator network that's calculating prices of vaults based on-chain oracles for all of this stuff. So we have to have like there's just a bunch of layers to which a vault's NAV is being calculated on chain. And anyone can actually become a validator by staking up tokens as well. Um, yeah, that was a very long answer to your initial question there, but I do think that Flare eventually will replace a lot of these incentives with real economic demand from XRP coming on chain, and yeah, excited for what we can actually do there.
There's never an answer which is too long. But yeah, XRP is going to bring a huge amount of liquidity. We're already seeing what it's going to do. If I'm not mistaken, there's around 150 million fXRP minted, right? With over 85% of it actively deployed. Is that correct?
Yeah, that sounds around right. Yeah.
So, and there's a hell of a lot more to come.
I think there's a huge opportunity. Yeah.
Yeah.
Now the question is like, where are people going to be getting XRP yield? There's definitely going to be development on XRPL natively. There's a couple of protocols that are doing this right now. There's definitely demand for people executing simple like carry trades. Certainly, like there's a large retail element to XRP generally, so you can easily run basis or something on it if you have access to centralized exchanges that can be turned into a vault product. Coinbase will be pushing CBXRP even more. But yeah, I mean, the opportunity for a lot of this stuff to live natively on an EVM chain is pretty reasonable, I think.
But who's actually providing that borrow demand today? Is it a retail, institutional? Is it both?
Yeah, I mean, it's a good question for also Flare. I can say that from our experience and just getting TVL and talking to people, it feels mostly institutional right now, which means that the opportunity here is XRP has always been in my opinion, a pretty retail denominated asset. So can we actually use Superform mobile surfaces, Android, iOS to actually get to some of those new users and then offer them like a low cost on ramp to actually get their XRP or even, buy XRP from a bank account. There really aren't that many walls that do this right now.
Yeah. And who would win if, or who wins the XRP retail depositor? Is it Superform or native XRPL protocols?
So if we did support, we are supporting shortly like native XRP purchases in the app, and that would actually be for XRPL. So like your smart account can also be linked to an XRP address. That being said, like to get your XRP to fXRP, that's another process of going through, like the Flare bridge, for example. So I wouldn't say that we're like competing with XRPL for deposits. That's more of a Flare thing. Um, but what we are competing with is, current, call it, distribution for XRP, which is mostly all on centralized exchanges, right? Like
Okay.
Coinbase, Upbit,
Yeah.
that kind of surface. But I think the users that come and do this sort of activity are fundamentally different from those users. And also, there's no way for users on the centralized exchange to get access to XRP yields right now. So we've actually seen like some wallets be pretty successful in getting retail XRP. Was lot of great products out there right now, which we'll work with for distributing our vault products. But yeah, I think
Mm.
like stale, unproductive sources of capital, regardless of what asset they are prime for vaults to disrupt.
Yeah. And well, we've actually just added Flare to portals, like I mentioned earlier on. Obviously, with Superform's Flare vaults among the first positions discoverable on our platform. Curators tell us distribution on newer changes on newer chains is the bottleneck. But from the platform side, what actually wins a vault its first serious deposits on chain like Flare?
It's all really institutional, especially with where markets are. Like retail is not really there. Retail has a lot of different ways to spend their cash right now. Lots of exciting things to chase, that make going after even a 10% yield opportunity, not the most attractive. But I'd say that we just need to break out of our current like mindset of going with more of like crypto native or speculator type of user bases, because there are definitely products that can bootstrap good distribution with Robinhood, and their USDG vault with Stakehouse. That's the 7%, and they've gotten great distribution for that day one. Like there's clearly even traders on Robinhood who I'd say are more speculative compared to your average general finance investor, more younger, 20 to 35 sort of demographic. Like they're also still interested in at least the stuff that they're not investing, having it earn yield. So I think we need to just have it be more of like a broader portfolio heuristic kind of thing where, just always be earning on your balances rather than it being like a trade-off. But right now in crypto, vast majority, especially on new chains, new opportunities, it's just institutional LP. Um, we actually, to bootstrap our flagship SuperVaults, didn't. We've never really done any of those institutional deals for our V2 SuperVaults. We just had a public incentive program through, we called it Up Only. Um, that being said, like there are lots of institutions that are just waiting, especially with where DeFi has been over the last 6 months, like kind of waiting to see how things shake out before they just jump into a new opportunity. So I think all of this stuff improves with time. But to start, it's all institutional, and then retail just kind of follows based on traction.
For us as portals, we're kind of middleman. We're a platform. We're neutral. We host all positions. Our feeling out in the market, we chat to a lot of platforms. It's very much institutional. And we often hit this conundrum, like, where's our institutional product, right? But actually, we're there. Like institutions can transact. They
Yeah.
can use portals. And, we are building a bit towards that direction now.
Yeah. No, if I'm looking at your platform, it definitely feels like you guys have more analytics information on these pools than really any other service has. Superform, we had a lot more information, not what you guys have right now in our V1 version of the app, and we actually toned it down because at the time we were more retail focused, and they're being kind of overloaded with stuff to actually look at. So our V2 version simplified that
Mm.
process a lot. We just have, cash, Bitcoin, and ETH, and then just keep it very simple. But then, that also makes it a little bit harder for institutions necessarily to come in here and like, run all of your indicators and some of the stuff that you guys provide. But yeah, I agree. It's um clearly like everyone agrees that DeFi UX is broken, and we need some way to solve it. Um, but there hasn't necessarily been one solution to make that happen. And I just hope that it's not that the solution to this is not solely distribution through a fintech, because I don't think that a lot of people outside of crypto understand why people in crypto spent so much time building the things we did to actually make them be, government censorship resistant stores of value. And I just know that, Robinhood is not going to bat an eye when they need to pause their vault or, stop somebody from accessing a product. They've done it 5 times before. The crypto is just another thing for them to control a lever on. So, but yeah, I'm excited to see what you guys come out with to make the platform more institutional. I think that's definitely a direction to go.
Yeah. Well, there's a balance, right? We can't lose the retail. We're not rushing it. There's no need to rush right now. The space changes quickly. So yeah, we just want to move with the market at the right times in the right way instead of trying to like guess what's going to happen next. Have we spoken about the Superform swap? Yeah. Let's touch on it. I don't think we have,
Yeah,
but not have we spoken, but have you mentioned it? I don't think you have, but let's go
probably
in that
haven't.
direction.
Yeah.
But yeah, so Superform swaps. These let users fund trades with an arbitrary number of input tokens across an arbitrary number of chains, which is close to home for us at portals, of course. What is the hardest technical problem in end token and end chain execution, and how does your routing decide where a trade actually settles?
Yeah. So we have our own bundler and ERC 4337 account abstraction infrastructure that people are using whenever they sign up through. You can use an existing EOA account, but then we create a smart account for you to actually pass through, so you can access all this stuff. Which was actually that was a big technical challenge at first was maintaining that all of that functionality you mentioned that's possible through the smart account is also accessible if someone wants to continue using their EOA. That was a big engineering lift. Thankfully, we had 7702, but there's a lot of like weird engineering around that. Um, but effectively, what our infrastructure and the bundler allows is that our core protocol is just a bunch of smart contracts and a bunch of hooks. Our bundler can then chain all of those hooks in a certain way to fulfill not just a swap action, but a bridge and a swap, a bridge swap deposit. Same thing on a redemption. If it's a async vault, I can actually queue the initial request, and then it'll automatically redeem through the controller. And a lot of that functionality, it's all happening through Superform Core, and Superform Swap is really just one of the products that's built on top of Superform Core. But Superform Swap, so we launched it maybe like a little over a month ago, possibly.
Sorry, what happens
And
when one leg of the chain reverts mid-execution?
so that's one of the trickier things to to
Right.
solve. Yeah. So we in our V1, the way that we'd handle it was we'd actually refund the user on that chain, but in V2 we actually just don't integrate protocols where we're concerned with that failure of execution. So it's actually stopped us from. It's made it harder for us to launch on some new chains because we can only really work with three bridging protocols. It's just across deep bridge. It's like intent based bridges across deep bridge and Um, uh, Actually, those are the only two we have integrated right now, and we have Stargate to get on Flare. But for Stargate on Flare, it's reasonable for us because it's just I think it's a USDT0 transfer, and those are all effectively deterministic. But yeah, it's yeah, that problem is exactly it. It's not just like the uncertainty, but also the time it takes. And the longer time it takes means more infrastructure we have to actually monitor this stuff. But the good news is that if any transaction were in the 0.01% chance were to fail, then it's always custodied by the user and it's in their smart account, even on the destination chain. So
Yeah. Those intent-based bridges are actually doing the heavy lifting there precisely because they shift the atomicity risk, right?
yeah.
But look, thank you. That was great. Onto up, right? So I think I told you before we hit record, I'm a Superform user, and I'm loving it. So thank you. And I'm
Good to
familiar
have
with
you.
up. So your community voted down a flat 20% APY staking proposal, and SIP 8 replaced it with a revenue-backed base reward, right? Plus upside and a 7-day cooldown. What did that vote tell you about your holders, and how should up returns track protocol revenue from here?
Were you one of those that voted against the fixed APY proposal?
No,
Maybe.
just stand up.
No, I'd say that it told us that people are very much paying attention. I don't think that something that happened to Bonk is not fortunately gonna happen to the Superform holders. Um, I'd say that when we proposed it, we have generally been thinking about how we can make up rewards more tied to revenue. And as we we started off in February whenever we launched it, and we're like, we just need to bootstrap governance participation. And we had relatively high emissions to the sub vault, which results in, I think at its peak we had like 8,000 sub stakers. Now we're sitting more around 5,800, I think. Actually just checked this morning. So participation rate has, and in each one of those governance proposals, we've had over 200 people vote. I think in the one where it was shot down, we had like 257 people vote on that. So clearly, we had overestimated or underestimated uh, everyone's uh, uh, ability to get behind a fixed proposal when Superform was still, comparatively early in its process. So we decided to come back with SIP 8, and instead of going for a 20% fix, we decided that we were going to continue to have it be uncapped upside just based on how much Superform earns, but we would guarantee at least 20%. And that's, that proposal went through great. I think at some point over, the next 6 months, like as Superform matures more, we probably try and propose something that gets us even more to, revenue backed emissions. But, we're one step closer, and that's what the community thought was reasonable. So, also along with that, we reduced our staking cooldown from 2 weeks to 1 week. So people were definitely making a trade-off before on, more returns or just lock it up. And we didn't really intend for that to be that significant of a decision when we first launched, but now, kind of balance it out. And if we were to reduce rates again, we'd probably also reduce the time lock there. But I'd say out of that 20%, a majority of it now is being made up. Increasing majority is made up by real revenue. So good position for us to be in.
Yeah, 257 people voting to reject free money in favor of a sustainable mechanism is not a typical community outcome. So, yeah, really good sign. So let's bring that same rigor to the growth side. Q3 is distribution, right? Paid media referrals, Android release candidate growing into review for the US, EU, Canada, Australia. I'm referencing your latest investor update, obviously. What does your funnel actually show now? Where are the first time depositors coming from, and what's the thing that tips them into that first deposit?
Yeah. My answer here is hopefully going to be outdated in a couple weeks to a month. But our iOS app has only been live in the US and EU for since we launched it in February. So it's mostly been American and some European retail, but we've seen probably like 80% American, 20% ex-US. And the first deposits on mobile, they're mostly just smaller deposits from people trying out the platform. I'd say like our larger depositors are all still coming through web. But the user base on mobile has been a lot more willing to try out new products. We launched Superform Swap, and we've seen a decent amount of revenue come in through that product already, and that's been a good mix between mobile and web. But yeah, I think like uh, the the hook for a lot of these mobile products is definitely different from the hook for someone using a web app. Um, I think your yield farmers, your crypto natives, still they're on web. On mobile, you're mostly looking for good on ramps, which hopefully we're solving that today. By the time this podcast goes out, we should have had easy on ramps for not just US and European users, but we'll have the Android app live everywhere. And you'll be able to on ramp things like, Hong Kong dollars, Brazilian real, lots of like, generally new jurisdictions that, you wouldn't even be able to access through your, larger fintechs. And then, yeah, if that on ramping is successful, then I imagine most people ex US, ex EU are probably interested in the stablecoin opportunities. We have seen reasonable interest in the XRP product, but haven't solved the on ramp side of it, and that's mostly like a American and possibly a Korean product. Um, and then but generally like our marketing campaigns and everything are focused on earn high yields on stablecoins, on make your assets productive, Bitcoin, ETH, XRP, and then for some more call it retail uh, trader channels, we'll be pushing out Superform Swap and some new features there. But there's so many products out there competing on trading right now that we want to kind of focus on what we do best, which is the yield products.
That's really smart. And that split, yield farmers anchored on web and curious retail exploring on mobile, like it maps almost exactly to what neobanks saw, or that neobank category saw, when Revolut and Monzo, etc., started adding. I don't know if you have Monzo where you are, but I left the UK 8 years ago, so but it was just kicking off there. But yeah, Revolut, Monzo, etc., they started adding investment products, right? So
Hmm.
this is, in my opinion, it's like where we're going now. It's that user, that mobile cohort, smaller first deposit is the actual signal that matters, right? People like my wife, she's never gone anywhere near this stuff, but she uses Revolut and drops some cash and investments. She would never have gone near that otherwise. And that's where we are now with DeFi, I think, and you guys are bringing this accessibility now to everyone. So yeah, congrats. It's a huge step with these apps launching. So yeah, it tells you what the onboarding friction still is when you compare it to before.
Yeah. I think it'll be interesting to see how the crypto native experience differs from the Revolut type experience
Yeah.
in a lot of these apps. My general thought is that Revolut, a lot of larger players, they're custodial and they're just going to have to play by certain regulations and constrain a lot of what their products can do because they're just in a different position than some of the startups. Question is, can we actually push out this feature set? Can the startups push out a feature set that makes it competitive and get traction before incumbents entirely subsume this. But I think that just given their architecture, there's just going to be things that they can't do. But we're also in a different stage of the economy. I never thought that Robinhood would necessarily be launching prediction markets and would even launch a yield opportunity like this and have it be curated by the best curator in the space, Steakhouse. So yeah,
True.
it's all a very interesting time of adoption for this stuff. But regardless of whether it happens through our apps or through the vault products, I think stuff like this needs to be built and will be used by lots of people.
It has to be. We're moving that way.
Yeah.
People like you are making it possible. So thank you very much, and thanks for joining us. I could carry on, but we've got to keep this short. You're busy, and we want to keep things in store and see what you've got to tell us in a couple of months, Vikram. But look, I'll start wrap up. We always end with a question, which is a bit of a game. You won't be held to account, but we'll find out the answer in a few months' time. But look, the DeFi has been through a bit of a choppy time recently. It always does, ups and downs. Most markets do as well. But this game is quite simple. What is your prediction for the total TVL of DeFi on New Year's Eve this year? So New Year's Eve 2026. Okay, so let's call it, 31st of January 2026. Today, the actual DeFi TVL as per DeFi Llama is $73 billion. What's your prediction for the end of the year?
Wow, we're at 73 billion. That's crazy.
Yeah.
I'm an optimist. But 6 months isn't a crazy amount of time. I think we'll probably get net TVL in is probably going to take a bit of time, so I'll try and temper my optimism. I'll say like 100 billion.
100 billion? I like that.
Yeah,
Bullish, not crazy, definitely doable, quite realistic.
yeah,
Yeah.
yeah. I mean, hey, look, if ETH goes back to 3K, that's probably the 100 billion right there.
Nice.
Yeah,
All
yeah,
right.
seems right.
Did you ever watch Top Gear?
Top Gear,
Car
no,
the car show? Anyway,
no.
there
Seen
are these
Top Gun.
so there were these presenters, right, on that car show, and they did it was a 1 hour thing in the UK. It was quite big in Europe. I don't know if it was big over there, but they had a game at the end. They'd have a guest on the show, right? And it was usually some celebrity. In this case, it's you, some celebrity. And they had this thing where that celebrity had to drive around a racetrack in what they called the reasonably priced car. Yeah. And it was just some crappy car, some family car. And everyone had the same car. So during each season, an episode of this thing, they had to go and there was a leaderboard, right? And they put the time of the person with their name on the leaderboard, right? Of the reasonably priced car. And you had wet conditions, dry conditions. It didn't matter. You just raced it. Yeah. That's what this TVL game is. It's just
Huh.
it's the equivalent of that. A random guess, basically.
I'm gonna go have to watch some episodes of Top Gear now. It's
Pretty,
on
pretty.
it was on British television.
Yeah, it was on British television. Yeah, I mean, I didn't really watch it that much, but that's where the inspiration of this game came from.
Huh. Fascinating.
Anyways, Vikram, look, it was really awesome chatting to you. Thank you very much for joining. We'll be in touch, obviously, all the time now that you've got your new vaults out and Portals is supporting them. But of course, we'd love to have you back on when you've got all your new releases out in a few months and all the good news to come. More good news to come.
Yeah. Yeah, definitely. Yeah, thanks for having me, Ed. This was a fun time. And yeah, maybe hopefully when I come back, we'll have DeFi at 100 billion. Do the
And
pod
we
then.
will.
Yeah.
Thank you very much.
Well, thanks.